everyone. Welcome to From Novice to Knowledgeable. Invest Smarter in 5 Simple Steps, presented by Sandy Chaikin. I'm Dan O'Connor, webinar organizer. Sandy Chaikin is the wife of our CEO and founder, Mark Chaikin. Sandy is currently working in marketing for Chaikin Analytics, following a career in consumer marketing where she worked for companies such as Elizabeth Arden, L'Oreal, and the Franklin Mint. Sandy's gone from a novice investing strictly in mutual funds in early 2012 to a confident investor who's built a stock portfolio that significantly outperformed the S&P 500 and most professional money managers in 2013. She'll show you how she went from a novice to a knowledgeable investor and how she invests smarter using Mark's simple 5-step method. The presentation will be followed by a brief Q&A session, and any questions not answered will be addressed via email. And now I'll turn the program over to Sandy.
Dan, thanks so much, and welcome all to this presentation. As Dan said, I'm going to show you the 5 simple steps that I've used for investing smarter and making more money in the stock market. So what we're going to do is show you how to invest smarter by myself explaining to you how I've done it. I mean, the whole goal here is to make more money in the stock market, right? So that's what I'm going to show you how I've done it as we go through this presentation. But in addition to making more money, what's just equally as important to me is to be more confident. And up until I started using this Chaikin methodology, I did not have the confidence to feel that I could manage my own money, and I always had outside people do it for me. Since embracing this system, though, I now do it entirely on my own. Mark and I, frankly, don't even talk about my investments other than in a general term. He usually doesn't know which stocks I'm holding. And that, to me, has been a really priceless benefit to managing my own money. You know, just the confidence that comes with knowing that I can do it. And I want to share those little secrets with you today. So what we're going to do today, as I said, is to go through the 5-step method. And the reason we're doing this is that you can spend less time on research and more time doing what you want to do. This is a picture of our son, daughter-in-law, and our 3-year-old grandchild. We love spending time with them and don't get enough of it, frankly. So by managing our money to the best of our abilities, we're able to spend more time with our family and do things that we want to do. I've gone from being a novice investor to a knowledgeable investor in just 2 years, as Dan said. And I don't always buy winners. It's not 100%, obviously, but I do buy a lot more winners than losers and have gained an awful lot of conviction and confidence along the way. And in doing so, I've managed to do this in about 10 to 15 minutes a day, so it's not a full-time job. The system is easy to follow, and as I say, I do it in about 10 or 15 minutes a day. And it allows us the freedom to now do things that we like to do in addition to seeing our family. We love to go to the beach, so that's one of our goals, is to make more time and make the money available so that we can do these types of things. I just want to reiterate, you don't have to be a stock market expert like Mark. I mean, Mark's had 45 years of Wall Street experience, and he's a real master at what he does. He has built this system so that people like you and me, though, can master it without having all the knowledge and information that he has. He's basically put it all into a box and given us that box, and that allows us insights into being able to do it for ourselves. He and his model really do the heavy lifting for us. You know, all we have to do is follow this 5-step method. And you've probably tried other methods and been disappointed, and you're thinking, oh, sure, is this going to be any different from what I've already tried? But I will show you how I figured out an easy way to follow it and how I've gotten great results, and you can too. So the opportunity is now. There's an awful lot of topsy-turvy movement up, down, all over the place on Wall Street. And I'm noticing that companies that report earnings, sometimes they report good earnings, and you would think the stock would go up, but the price goes down, and vice versa. So it's a pretty choppy waterfront. All the more reason to have a plan and stick to it. It'll give you the confidence to navigate and stick to the plan. So why should you believe in Chaikin? As I said earlier, Mark has been on Wall Street for over 40 years, and he's been a stockbroker, a trader, fundamental and quantitative analyst. He created for his entire career until recently tools for professionals so that Wall Street traders could make better decisions. And in 2009, he came out of retirement to start Chaikin Analytics. And the reason was, after the meltdown of 2008, he saw there was an awful lot of individuals like me who were handling our own investments, but we didn't have the tools to do that. There were billions of dollars, literally, that came out of brokerage firms and went into individual retirement accounts, like at Vanguard, where I have my funds. But he wanted to level the playing field. He wanted to give us the same sophisticated information and tools that he gave the pros. But obviously we wouldn't, if we were looking at it, certainly if I were looking at what he gave the pros, I wouldn't make heads or tails of it. So he distilled it all into very simple graphics that we could easily understand. Mark's background is the creator of several technical indicators that are used worldwide, and most technical analysis packages worldwide carry his indicators that are listed out here. Now, some of these are on the Chaikin Analytics platform, so they're bundled into it so we can see it as well. But as I said, he's a real heavyweight in the professional space and is now sharing that with individuals. He's a frequent guest on CNBC and other networks, and he contributes to both Forbes and Market Watch. And he's basically been covered in all the financial publications, including Barron's. Barron's continues to give us great reviews every time we come out with a new service. So how did I get started at doing this, other than being married to Mark, who founded it? Let's go back to the 70s. When I was working in the 70s for Elizabeth Arden, L'Oreal, Franklin Mint, that was a term from, say, the 70s through the 90s, they all had 401k plans. And those 401k plans allowed me to invest my funds in mutual funds. There was no individual stock selection. So those mutual funds were very profitable for a long time. Fidelity Magellan Fund, like Mason Value Trust. I had some really serious profits being invested in those funds, but it didn't last forever. And I figured in the 90s that I wanted to consolidate these various plans and bundle them into one and have it professionally managed. So what I did was I hired a professional who came recommended, and the first order of business for him was for him to sell the funds that I had, and I only held one stock at the time. I had Airgas, which is a company based in Radnor, Pennsylvania, right outside Philadelphia, where we live. My sister works for Airgas, and she's worked there about 15 years. So I had bought this stock when it was below 20, and was just holding on to it. He sold Airgas. He sold my other mutual funds. And Airgas, by the way, today is at 106. So I bought that stock for under 20. It's now at 106. So I'm sorry that he sold it. But nevertheless, that was the strategy. And I understand that is pretty much the strategy of most money managers, that they sell and then they reinvest the money in their own choices. So he put me in 8 or 10 mutual funds, and obviously I paid a fee. So a few years later comes 2008. Sadly, we all know what happened in 2008, right? I hope you all didn't lose 40% of your portfolio like I did, but why don't you just type yes in the chat box if you had that same unfortunate experience. Well, I'm sorry to say I see a lot of yeses, so you all can identify with my dilemma. I do remember those phone calls so vividly. I remember exactly where I was when I called him and said, "Oh, don't you think we should sell this? You know, everything's just tanking. I mean, shouldn't we just sell and then, buy it back when it's lower?" And he said, no, just hold on. We just got to ride this through. Not to worry. Well, not to worry later. Easy for him to say, but I lost 40% and paid a fee on top of it to add insult to injury. So I obviously needed a change. What happened during that time is that things obviously rebounded. Mark and I were living in Connecticut up in Litchfield County, and this is the back of our house with our two little Karen Terriers who sadly are no longer with us today, but one of them has her little coat on. They're very sweet. But we were living in Connecticut. We decided to move to Philadelphia, which we did in, it was a little after 2008, I think. Moved to Philadelphia, and we bought this townhouse, and there's Mark standing outside the townhouse right when we bought it. So we're living very comfortably now in Philadelphia, but it did really take me back in terms of who was I going to trust? How was I going to invest my money and be confident that I wasn't going to lose any more than I've already lost, or ideally make some of it back, which I have since been able to do. So I took the money out of the manager's domain, but then I didn't know quite what to do next. And this picture, I just love this picture because I identify it with me. I identify it not only with financial information, but so many aspects of our lives where we're just overwhelmed with information. And technology is great these days, but it sure does push the information at you and overwhelm us with emails and documents and mail and everything else. And it's just like you really don't know where to begin. So where I started was I put the money in a Vanguard S&P 500 index fund, and I still maintain a portion of that in that fund today, which I understand is good just to balance your portfolio with some mutual fund activity. So that's where I still maintain that today. I love Vanguard. They're a Philadelphia company too, but they have tremendous customer service, and their fees are so reasonable. It only cost me $2 to buy or sell a stock, and I can do it from my iPhone. So I've got an iPhone app with Vanguard. If I decide to buy or sell, I just go in there, type in the buy code, boom, 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 and I'm done. So it has made my life really easy. I would recommend it to any of you who are looking for a place to park your money and trade. But the 2008 was a real wake-up call for me. It really made me realize how important it was that I become knowledgeable and confident enough to manage my own money and not turn it over to somebody else who's not going to be as passionate about it as I am. I mean, after all, who cares more about your money than you, right? So the solution for me was easy because I was married to a stock market expert. So I took advantage of that and embraced his concepts, and it's done me very well. So what the Chaikin Analytics system does is it helps me find individual stocks that are going to outperform the market. it gave me a very simple yet very focused approach that I can follow. I don't get caught up with all of the clutter and the information overload. I can kind of scan that out and just focus on these 5 steps. And it works for me, and I know if it works for me, it can work for you. So here are the 5 steps, and we're going to be going through these in the presentation. Like I said earlier, you don't have to be a market guru like Mark. In many cases, I think that can almost overcomplicate. I have talked to people and seen people in situations, talk about the system who are very educated and very knowledgeable about the stock market, and it's hard for them to embrace a new methodology. It's hard for them to see truth in something that they didn't create, frankly. So I think that can be more of a detriment than a plus. But for somebody like me who is coming with a blank slate, it's been terrific because I just follow the system. I've got these 5 steps, and that's what I do. I don't try to outsmart it. I don't second guess it. I just follow these steps religiously because it's worked. I've been doing this now for 2 years. I started out 2 years ago with 2 stocks that I bought in 2012. I bought eBay and Comcast because Mark had been talking about them in his weekly market report and market insights, and he also had been featuring them in television on CNBC and Fast Money. And I thought, well, wow, this sounds good. I'm going to get in on this. So I took the plunge and put a small amount of money into each of those 2 stocks and watched them grow. So over the less than a year, I think one increased 40% and one increased, I think it was 60%. So that was a very good start, and that obviously firmed up my conviction to follow this system. So as I say, it keeps me focused, and it gives me the conviction to follow the plan and not let emotions get in the way. And I hear Mark say this all the time, that one of the biggest issues investors have is their emotions, and how do they overcome their emotional fears and frustrations when they see a stock maybe going up or down or against what they feel it should do, and they've got to make a decision what to do. Do they buy it? Do they sell it? Do they hold it? This system really helps answer all of those questions. We get a lot of testimonials, and a lot of them come on webinars where our subscribers are on these webinars and type these into the chat box. So feel free, if to all of you subscribers who are on, feel free to put your comments into the chat box. And everyone also, as Dan said earlier, feel free to put your comments in about questions or any issues that you might have that you want us to address. So this investor is also an author and a lecturer. He teaches a class on investing, and what he says is self-directed investors need a very structured and easy-to-use system that will keep them out of trouble. That's the way Chaikin Analytics was designed. Another subscriber of ours says, watching Sandy's webinars, I feel quite relieved knowing that I was making the selection process far more complicated than I needed to. So again, it's the simplicity of the method, and it's the fact that it does work. All right, so where do we get started? Step 1 is using a proven methodology, and our methodology starts with a Chaikin Power Gauge rating. So that is a very simple but powerful indicator. And what Mark did was he created this indicator that ranks a stock from either very bullish to neutral to bearish or very bearish. And it looks at a stock's potential over the next 3 to 6 months. So it's looking forward on a stock and saying, this is where I think this stock is headed. And we rate over 5,000 stocks. And as I said earlier, he's designed this so that it's very easy to understand. green is bullish and red is bearish. There are four major components that are outlined here, and this again is done on every stock. This is a quite older version of the iPhone app that was done on Comcast a year or so ago, and it's gone significantly up since then. It's up around, I think it's 54 or so by now, but you can see it had a very bullish rating. So the rating itself is simple. As I say, it goes from very bullish to very bearish, but the components and the algorithm underneath the surface are far from simple. So Mark took these four major components, and each component is then made up of 5 factors. And he had hundreds to choose from, but he narrowed it down to these 20 because he felt these were what the institutional investors look at every day. He felt these were the things that they felt and relied on most heavily. And so those are what he felt were most important to determining the outlook for a stock. So this power gauge rating is the centerpiece of all of our tools. We offer everything from a free iPhone app to Chaikin Analytics, which is the more robust workstation that I'm be talking about mostly today. But since 2012, as I said, I've been investing in stocks using the power gauge. As I said, I started with the eBay and Comcast, probably with a rating very much like this on Comcast, and now have expanded using the Chaikin Analytics, which offers me a lot more tools, but has the same basic concept based on the power gauge rating. So here's the 20 factors. As I said, these are the 20 factors that the pros look at every day. If you or I were to research a stock, it would probably take us at least a couple of hours to go onto Yahoo Finance and other online resources and look up all of these things. There's no reason to do that when you can get this literally in seconds from the Chaikin Power Gauge. You plug in a symbol and the rating pops back up at you, and that saves you basically 2 hours of work. Even if I were to research my own stocks, it would be ridiculous because I wouldn't even know what to look for or how to read what I'm looking at. So for me, that would be a non-starter. But the way Mark has designed this, and our son Eric worked closely with him on the interface, and the way they designed it was that you can drill down on any one of these 4 major components and see the power gauge rating on each of these 20 factors. So Warren Buffett would look at something called these financial metrics. This is what he focuses on, and different professionals and money managers with their different styles will put emphasis more or less on one of these, or I think earnings performance. I think that might be Jim Cramer, I think, who focuses on this. I'm not quite sure. But in any event, the things that I look at, because for me, looking at 20 factors is too much information. But the things that I look at are under financial metrics. I look at the price to sales. And Mark's been talking, again, in his Market Insights weekly report, he's been talking about these high-flying stocks. He calls them high-flying without a safety net, because if they run into any type of resistance like a negative earnings report, they basically come tumbling down, and there's no place for them to go but down. Stocks like Amazon, LinkedIn, some of the computer software stocks like Splunk, they all have very high price-to-sales ratio. And so if you see that in a stock, that's something that should alert you to say, well, maybe I better take a second look. The other 2 things that I look at are under expert opinions, and that's the short interest and the insider activity. And let's look at a few examples here. So this is one of these high-flying stocks, Splunk. and I've outlined the price to sales ratio. This chart is from the iPad application for Chaikin Analytics, and Chaikin Analytics is also available on desktop, but the slides that I'm showing you today are all from the iPad. This is the power gauge rating down here, and we'll get into the meaning of all these other things shortly. But just to show you, the overall power gauge rating is here, which is very bullish on Splunk, so that's not good. But I drilled down to look at the financial metrics, and here it's very bullish to very bullish here, price to sales ratio. And you can see that the price of this has just been tumbling down, and the power gauge has been red or bullish since mid-March. So that's a warning sign when I see something with a low price to sales ratio. I know to basically avoid it if I'm looking to buy something. The other thing which I said I use is what I call the secret sauce of the whole power gauge rating. It's the expert opinions. I don't think you can find these opinions boiled down this way anywhere else. But here's the drill down on that fourth component, which shows short interest. In the case of ConocoPhillips, it's bullish, and insider activity, which also is bullish for Conoco. This stock has a rating of very bullish. So I feel those two are important because the smartest guys on Wall Street basically are the guys that do the shorts. And they only short for one reason, and that's because they think the stock is going to go down. So if the stock is showing a bullish power gauge rating right here, then you know that they're not betting against it. They're betting, they're for it. So bullish is good. Same with insiders buying. If the insiders are selling, you're going to see this indicator show up here in the bearish camp. And that's not good because insiders sell, I'm sorry, this is insider buying. They only buy for one reason, and that's because they think the stock's going to go up. They sell for multiple reasons. They could have college tuition to pay or a second home to buy or something. But they only buy because they think the stock's going to go up. So in the case of ConocoPhillips, if that's showing bullish, that's a good sign too. So other than these three, I just focus on the overall rating, which I find here, very bullish for Conoco, and those four major components. So I basically narrow the field to a very bullish rating when I'm looking for a stock to buy. We rate the stocks in our analytics system all by power gauge rating, and the system is list formatted, so the lists are sorted by power gauge rating. You can sort them also alphabetically, but what I like to do is show them as the default, which is the very bullish are at the top, so the cream rises to the top. You see that the best stocks at the top, then you see the neutrals, and then you see the bearish, and it makes it a very easy process to sort through a list when you've got them sorted that way. Another thing I use, in addition to these tools here on Chaikin Analytics, but a little secret that I can share with you is the CNBC Real-Time iPhone app. It's a free iPhone app, and I find it really helpful just to kind of check in during the day. And I also can create lists on there, like of stocks I'm watching or stocks that I'm holding, and it pushes me articles about those companies. Seeking Alpha does something similar, and that's a good resource too, and that also is a free iPhone app. So those are the other two resources I use in addition to the Chaikin Analytics. So regarding the power gauge rating, we do get a lot of testimonials telling us people who have made a lot of money using the power gauge rating. This particular is a marketing professional. He says the returns are all the proof I need. The power gauge is my go-to guide. My returns are all the proof I need that Chaikin's. So step 2, is to play good offense. What do we mean by that? Well, just like in chess, we mean you've got to put the odds in your favor, and in our lingo, that means you start with buying only stocks that are bullish. I mean, in my case, I pretty much zero in on the very bullish ones. So this is what we consider, these 4 or 5 components here are what we consider comprise a classic bull. And I'm going to go through these on a chart, but here's an example of a classic bull Cigna that up through August of last year, it just shot straight up. And you can see all this green in here. And basically, unless you're colorblind, you really can understand the system, because that's what you want. You want all this stuff down here to be green. And you can see when it is, you can see the price rewards you by going up. You can let's go to Apple. I'm using Apple today as a classic example. It's a recent example. It's had a little choppy time here, but I think it shows a good example of what you want to look for. And everyone's always interested in Apple, right? So the first thing to look at when you're looking at this chart is the power gauge rating, which is this ribbon along the bottom. You can look at it in a 1-year view, or you can switch up here to a 5-year view. But I tend to look at the 1-year view. So you can see the price generally correlates with what the power gauge is telling you. During these periods of neutral, the stock is pretty much going sideways. As the power gauge turns green, the stock price starts going up. And more recently, you can see it turned green mid-April. And look what happened here when they came out with a positive earnings report, and it really jacked up. So that's the predictive value of the power gauge rating. It really does work. So if you're saying to yourself, well, gee, you're just cherry-picking examples, on my stocks, how do I know this is really going to be predictive? All you have to do is look at the chart and look at the price and see if it correlates to the power gauge rating, and I'll bet you 80% of the time it does. The other indicators that we look at for a classic bull is this second one called relative strength. And what Mark and Eric did here was to make it really easy to show as a basic heat map. So the green is positive. That means it's outperforming the market. And the red, as it went in here in the spring, is underperforming the market. So again, you want to look for the green. And you can see here where the power gauge turned green, the relative strength turned green, and this indicator up here is one that Mark created 20, 30 years ago called the Chaikin money flow. And this is, every pro uses this to trade every day. This basically is how he made his name, and this is still as relevant today as it was when he created it. But what this shows is institutional money coming in and out of a stock. So if there's money coming into a stock, that's a good sign. That means the pros are buying this stock. Whereas if you see long periods of red like back here in the fall, that means money's coming out. And you can generally see the correlation with the price. And as I was showing on these two, you add this third green one, money flow coming in, and then look what happens. I mean, it just really takes off. So, I mean, ideally, you want to be looking at these these indicators and make your decision to buy this stock, right when these things line up. And these visual displays really make it easy to identify that. Okay, here's a more clear-cut classic bull, Hewlett-Packard. This has had a power gauge rating of bullish for pretty much a year, with the exception of a month or so in the fall. But other than that, it's been very strong. You can see that the relative strength, so this stock has been outperforming the market since about December. And you can see there is money coming in and out. Mark says it's natural for money to come in and out. and not to let that hold you back. Although when I see money like this coming out, it gives me a little bit of pause. And you can see that it basically correlates with a sideways price action. But now that these are all lining up again and everything's green, this stock is likely to continue to rise. This is I think this is a 20-day moving average, this brown line here. So on a bullish stock that you're looking at, you obviously want that to be trending up, not down. So that's a classic bull. Now the other place that I look for ideas of what to buy are in what we call hot lists. And as I said earlier, our system is all based on lists. So you can go into your own list where you can create as many user lists as you want. I have one for the stocks I own, one for ones that I watch, and one that Mark has recommended on Market Insights so that I can monitor those. But you can go into these hot lists, and if you're looking for a large cap bull, there you go. And these are all sorted, again, by power gauge. So you've got the best possibilities at the top, followed by neutral, followed by the bears. One of the things we're going to look at is one of these charts, which is the upcoming earnings ideas. So why is this important? There tends to be volatility around earnings. And if a company reports good earnings, chances are the stock price is going to go up. And if they report bad earnings, chances are the price is going to go down. This can be a helpful aid to you to know when to get in and out of a stock, or if you own the stock and they're coming up to reporting earnings, it's an opportunity to buy more of that if you feel really positive about it, and if all the indicators are positive about it. Which is what I've done a number of times. So I took this from last week. These are the upcoming earnings ideas for last week. Now, remember I said what I like to look for are stocks that are very bullish. So the first stock in this list is Americo. So let's drill down on that and see what that looks like. Okay, so they reported a week ago. It was on May 28th, actually. So we're now, I did this chart yesterday, June 3rd. So they reported right around here. Now, they did report better than expected earnings. And you can see this has a very bullish rating. And you can see going back to April, everything lined up. So if I were looking for a stock to buy, and I went to this earnings report and I saw this would be a very good candidate for me to consider buying, because you've got green power gauge, strong relative strength, and you've got money coming in. So what happened? They reported and the stock shot up. The day before they reported, they were at 267. Now today they're at 284. So they've gone up 6% in 1 week. This is not unusual on these type of stocks that are highlighted in Chaikin Analytics and in Mark's weekly Market Insights as well. When they spike up, it's often a good idea to sell it, because they tend to, if they have a really good report and they shoot up like this one does by like 6%. I mean, just take your profit in 1 week, make 6%, say thank you very much, and get out. Because what tends to happen is it settles back down again. It's still a good stock, but it often can spike above what it will settle down at. So that's a good opportunity to just take your money and move on. Industry groups is a great way that I use, a great resource for looking for ideas. Now, why do I say that? Because you want to buy strong stocks in strong industry groups. And we rate 5,000 stocks. So how would you know which of those stocks of the 5,000 are the strongest stocks and the strongest industry groups. Well, the system makes that easy for you, again, by sorting and putting the best at the top. So this is a sort by industry. And it's not just Chaikin that says buying strong stocks and strong industry groups will outperform regular normal performance. It's Zacks and other professionals say that that's just good policy, that you'll outperform if you invest in stocks, strong stocks and strong industry groups. So when you're shopping for a stock, look in the strongest groups. They're ranked here by power gauge. The strongest group is oil integrated. And within oil integrated, now I can see which individual stocks make up that industry group. And then it ranks them going down. So if you like to short stocks and you're looking for bearish stocks, you just go to the bottom of the list. And there's the worst stocks for you. So that can give you ideas on the other end. But it's a great way to narrow the universe, because otherwise with 5,000 stocks, there's just no way you can, talk about information overload, right? You just got to get this stuff sorted so you can make sense of it all. So are you all with me on this? Does this make sense? Can you just type yes in your chat box if you understand what I'm saying here? Okay, great. Thank you. You're with me. Okay, so I said you can drill down and see who makes up, which stocks make up each industry group category. So I drilled down on oil integrated. Now I have a couple of choices of the ways I can show this list. I can sort it by this bell, which will give me the signals. Step 5 is our signals, which we'll get into shortly. But step 5 will show you how to use the Chaikin signals to time your entries and exits. You can do that by just sorting any list by these alerts, and it'll push you these alerts. So I did this yesterday, and you can see on BP it pushed me an oversold buy signal. So and it's also you can see if I were to sort this in list view, it would give me more details on each of these stocks going all the way down through the list. And you can see it sorts the very bullish ones at the top. So, COP is a really great candidate today. It's the strongest stock in the strongest industry group. So if I'm looking to buy a stock, that would be the first place I would go. But I'm interested in this buy signal. So I'm going to BP. And here's the chart for BP. As you can see, it's a little choppy along here. It's not like a signal that went straight up. So what would I do? I would look at this buy signal and say, well, gee, tell me if in the past when this buy signal has triggered, has it gone in the right direction? And so here's the overlay. You can...
Hi, everybody. This is Dan O'Connor, webinar organizer. Just give us 1 second. We're just having a technical difficulty, please. Thank you.
Dan, I can take over if you can't resolve it quickly.
Okay, thank you.
Okay, hi everybody, this is Mark Chaikin. We always try and have a backup, just like you need a stop loss in trading. There's always a backup that's needed if there's a technology glitch. So we've had a technology glitch on Sandy's end, so I'm going to fill in and continue the presentation. And welcome to the webinar. So what Sandy was showing you was the ability of the Chaikin Analytics to seamlessly go from top-down industry group ranking to the best group, to the best stock in the groups, and then to a stock that's triggered a specific buy or sell signal. So in tapping BP, the old British Petroleum, you see graphically that oversold buy signal that Sandy was talking about was triggered 2 days ago. The point being that these are actionable signals. They don't always pinpoint the absolute tops or bottoms, but if you're looking to put money to work, in this case in a strong stock in a strong industry group, it's a call to action that says look a little more deeply. And what
that's true. Can you go on to Gmail? I can log in from your Gmail.
Sandy, you want to go on mute, please, temporarily? What Sandy did here was to drill down on expert opinions to show you those two indicators that she likes to check before she buys something: short interest and insider activity. And if you look on the bottom left, you see that they're both very bullish and contribute to a bullish expert opinion. So the other stock that was featured at the top of the list was ConocoPhillips, and Conoco is also something that we highlighted as a classic bull. The power gauge turned bullish on ConocoPhillips in mid-March when the price was around 70. It was trading close to 80 yesterday. And here, Sandy has drilled down on the left on financial metrics to show you that the price-to-sales ratio for Conoco is attractive relative to the other stocks in the industry group, which contributes, again, to a bullish financial metrics rating. So this is a classic case of solving the information overload problem. You've gone from a top-down approach to specific buy ideas if you're looking to put money to work in the market. And in terms of the industry groups, we got a really good shout out from Barron's from Mike Hogan, who writes the electronic investor column. Chaikin is in good company. One way to locate a good stock is to locate the right industry group. Chaikin's approach recommends both specific stocks and industries to swap for weaker performers. Sandy referred to the fact that other people who came before us have zeroed in a serious way on how powerful industry group analysis can be, and that's why it's one of our 5 steps. Both William O'Neill at Investors Business Daily and Zacks Investment Research, as well as Standard & Poor's, have published massive amounts of research which document the fact that investing in strong stocks and strong industry groups will outperform investing in weak stocks in weak industry groups by a country mile. What we do that's different is that we measure strength in a different way. All these other people who are highly credible, O'Neill, Zacks, and Standard & Poor's, measure industry groups' strength strictly based on price activity. And that's fine. We do that as well with our relative strength indicator. But we do something unique, which is use the power bar. How many stocks in an industry group have bullish or bearish power gauge ratings? And that's the basis of the ranking that Sandy was showing you when she showed you the industry group ranking tab. So step 4 is how you play good defense.
Mark,
Yes.
I'm back.
Okay.
I am back now.
If Dan wants to pass you control, I'm up to step 4. I'll just point out that in the webinar decks that I've been doing, I've used the sports analogy. Sandy, I think, feeling that football is not her thing, has replaced it with a chessboard analogy, and I love that. I wish I had thought of it myself. So with that, with these two, I believe, knights facing off against one another, Sandy's going to get back into the flow and show you how to play good defense.
Great. Sandy, are you all set to show your screen?
Yeah, you can
Great.
flip it over to me.
Okay.
Thank you both. Boy, it's good to have backup plans, that's for sure. Okay, how's that?
Great.
You're good.
Okay, up to step 4. Mark, thank you so much for picking up on that, and Dan, thank you for fast thinking there. All right, so step 4, as Mark was saying, most investors spend a good amount of time looking for the next big stock. You know, what's the next Apple? What's the next big hit? You don't often say to somebody, hey, what's the next big loser? Right? I've never heard a conversation go that way. But these losers can really play havoc with your portfolio and really diminish your returns overall. One bad trade can really do a lot of damage. So in the Chaikin method, we feel that managing risk and avoiding these losses are just as important as finding the next big winner. So in this step, we're going to be looking at how we identify those landmines before they take off. or I'm sorry, before they tank, so that you can get rid of them and get them out of your portfolio. So just as we had what to look for in a classic bull, we have what to avoid in a classic bear. And it's pretty much the reverse of what we went through for the classic bull. Now, the caveat here is that I don't own any bearish stocks. And when you embrace the system, you will not own them either. So you will never get to this point of owning a stock that looks like what I'm going to be showing you here. It's very easy to identify. Again, if you can see the difference between red and green, that's pretty much all you need to know, because just like we were looking for a sea of green on a bullish stock, we're looking for a sea of red here to identify a bearish one. And it's really not prudent to hold on to these bearish stocks. I think here's where the emotion often comes in, or usually does come in, when you buy a stock and then it goes down and you think, oh, I'll just hold it, it'll come back up again. I've honestly caught myself in the same trap, knowing what I should be doing but not always doing it. So I've had to learn the hard way that I really have to be vigilant about weeding them out when anything starts to turn south, just to get rid of it. So how can you get those warning signs? Let's look at a couple of these examples here. So LinkedIn is another one of these high-flying stocks that Mark has been talking about in a negative way for months. And you can see from the power gauge rating, it's been bearish since December. You can see the relative strength has been negative for pretty much the same period of time. And you can see that there's extended periods of money coming out of the stock. And these are these little sell signals that would help get you time your exit along the way. And they're basically warning signals. If you were watching this stock or own this stock, you'd be getting these little alerts. You don't have to look for them. They'd be pushed to your screen every morning when you go onto your system. You'd say, there's a relative strength sell signal like there is yesterday on LinkedIn. That would come to you. So it's very easy to identify these trends by just looking at these same indicators. One thing I didn't go over earlier was this overbought, oversold indicator. And this pretty much tracks the progression, the natural price progression of a stock. I mean, a stock does not go straight up or straight down. It doesn't go like this brown line. That's the trend. But you can see it does all this zigging and zagging here. So if you're buying or selling, you want to sell when it's zigging up, and you want to buy it when it's zigging, down. And this helps you identify that. These peaks correspond with the peak in the price, and likewise these valleys here correspond with the valley down here. So when you're looking either to buy or sell, this is a very helpful timing indicator. And what this is showing now with this up this way is this is a really good time to sell. This is about as high as the stock's going to go for a while, because in its natural progression, it's going to start coming back down again, just like it was up here. And now it's fell down, kerplunk. You can see that there. Speaking of kerplunk, Splunk is another example. It's a computer software. It's featured in Market Insights in April as a bearish stock of the week at 61. It's now, about 6 weeks later, it's now 40, so it's down 35% in 6 weeks. I mean, wouldn't you like to have gotten rid of this? Look at this. It looked pretty good back in here, right? January, February, March was looking not bad. Everything was green or neutral, and sometimes when a power gauge is neutral, the price still can trend up. So that's not an end-all and be-all in itself to sell. But if all these other indicators start going against you, that's a clear-cut signal. If you've got a bearish power gauge, bearish relative strength, and money coming out of the stock, I mean, that's a no-brainer. You just got to get out, because look what happens if you don't. It just kerplunk, goes way down. And there was a sell signal that just triggered the other day here at this little peak. So if you hadn't gotten out here, it would have gotten you out here. I don't sell short, but people who do use these as short sale ideas as well and have made a lot of money. We get a lot of positive feedback on these short sales. One guy went to Hawaii for 2 months, pays for his vacation for 2 months in Hawaii from one short sale on Amazon. So, I mean, this stuff is powerful. It really does work. Okay, here's DSW. I'm really sad that this stock does not do well because I shop here, and I shop here all the time. So I don't know how they could not do well with people like me shopping there. But nevertheless, it has not done well. It was featured as a bearish stock of the week back in Market Insights in mid-March at 40. It's now 26, so it's gone down 35% in those 6 or 8 weeks. So they reported earnings May 29th, which is right here. You got a little sell signal here, and then this gap here is because it dropped. The price dropped all the way down here to the 20s. But you were getting warning signals all the way. I mean, look at the red power gauge here, red relative strength. There's a lot of money coming out of this. And you can see this is just one of the 6 overlays of sell signals, but there are other sell signals along the way as well that would have warned you. So it's powerful stuff. You know, if all you got from this webinar was to subscribe to Market Insights, I mean, that is such a no-brainer. Mark issues it every Sunday. It's wrapped into Chaikin Analytics, but it's a standalone product for $90 a year. It's like you'll make up your $90 in your very first week if you follow the advice he's got in there. So more testimonials. These are about Market Insights because those stocks that I'm talking about were all featured in Market Insights, and our subscribers were forewarned. Mark's weekly Market Insights works as my market trading GPS. The accuracy of the S&P 500 index level prediction is pretty amazing. Another subscriber says, I sincerely appreciate Mark's effort to help the small investor gain access to its highly sophisticated stock market guidance for a very reasonable cost. Okay, so we're up to our last step. I'll go through this quickly because I see we're pretty close to our time here. How do you know when to buy and sell? Well, this is the magic of Signal 5. Step 5, I'm sorry. It will help identify when you want to buy and when you want to sell. Now, Valero Energy is a company that I bought, and how did I know to buy that? Well, again, Mark featured it in Market Insights, so I had it on my watch list, was watching it. 69% of his picks in Market Insights outperformed in 2013, so that's a pretty good record. So I tend to watch those buy and sell picks pretty closely. Puts the odds in your favor. But here's Valero, and here's a buy signal recently. This was just a couple of days ago. This happens to be a relative strength breakout. There are 6 pairs, as I said. I'm going to just refer you quickly to the resource user guide on Chaikin Analytics, which is available from our website, chaikinanalytics.com. And that will go into the methodology behind each of these 6 pairs of buy-sell signals. But basically they trigger, and these signals are pushed to you so that when you go into your any list in your alerts view in the morning, you'll see those signals very prominently displayed, and you'll know to take action. BP, I'm using this because this is in the oil integrated industry group, which, as we just reviewed, was the top one, the top industry group for now. And so when I drilled down on it, or I didn't even have to drill down, frankly. I went into alerts view. I saw there was a buy signal yesterday on BP, so I went into the chart. So here's the signal. Were the other signals reliable? Well, yeah, they pretty much were. I mean, they weren't the absolute rock bottom price, but then look what happened after each signal. the price went up dramatically. So that gives me confidence that this is a good signal. Everything's lining up here, including the price, which is dipping down. Remember, you don't want to buy it when it's up here. You want to wait for it to fall back down a bit in its own natural way, which is what it's doing. Green, not bad. A little bit of green, a little bit of red, not terrible. And let's look at what I like to look at, expert opinions. Well, these are outstanding, very bullish, short interest. People aren't shorting it. Insider activity, the insiders are buying it. I mean, those are two of my strong criteria. So if I were looking to buy a stock, and this would have been on my watch list, I get the buy signal, and there you go. I mean, you can see how easy it is. It's basically, it's basically done for you. The thinking's done for you. You just have to execute. On the flip side, the sell signals are equally as powerful and reliable. This is one on LinkedIn. There's a couple here, actually. There's relative strength sells, and there's overbought sells. Excuse me. So you can see in a matter of months, there's like 4 sell signals all right in here. And this kind of tells you the whole story as to why, right? The red. So this is a very good friend of mine. She and I went to school together. I've known her since 9th grade. She's a firm believer in Chaikin analytics. She says, I'm now totally addicted to the Chaikin system. I may need an AA meeting if this doesn't stop. So let's quickly review these 5 steps that we've just been through. The first step is you want to use a proven methodology that you can trust, and for us that's the Chaikin Power Gauge rating. You want to play good offense. You want to sort by industry groups so that you're buying the strongest stocks in the strongest industry groups. You want to play good defense so that you avoid landmines, and you want to know when to buy and sell. And you also want to be a confident investor. So I feel totally confident now that I can make my own decisions. I don't need to rely on or pay somebody else to do it for me. And as I said in the beginning of the webinar, for me that's priceless. I mean, that's a benefit I can't put a dollar sign on. In addition to making a lot of money with this system, I feel now very confident, and that's a great feeling. It's a great feeling of freedom, frankly. Here's one of our subscribers on a webinar in early January said that her analytics subscription paid her back more than 11 times in 2013, by far the best investment I've ever made. Anne was a very skeptical subscriber in the beginning. She really hadn't bought into it and needed a lot of coaching and encouragement to stick with the system. And she's now she does our PR, basically. I mean, she's just thrilled with what she's found in the system. Another subscriber said it's paid me enough money this week to buy a year's subscription for 15 people from profit alone. So that's a pretty strong statement. Now here's our neighbor, who is also a good friend of ours, and he says, Mark, I made enough money on Rite Aid and Green Mountain Coffee with Chaikin Analytics to buy a new car. So there are tangible results to these profits. Okay, so we want you to get up and running quickly so that you can start making money and enjoy these good returns. So what we've done is we put a package together for the webinar that includes all of these things. You know, it includes the analytics, the workstation on the iPad and the desktop. We have free tutorials that we schedule with you to get you set up so that you understand how to use the service. We offer webinars. You get Mark's weekly report. The health check, which I'll show you in a second. You get the buy-sell signals. You know how to profit in earnings season because we show you how to identify on portfolio health check your stocks that are reporting earnings. And you get to drill down on research reports. So this is just an example of a research report that you can get from the iPad or the desktop. And you wouldn't want to turn your desktop, but you can turn your iPad, and then you can get a 4-page PDF research report on any of 5,000 stocks. The health check is really helpful. Oops, sorry. Let me go back one. The health check is very helpful because it does a complete analysis on your portfolio or on any portfolio or list of stocks in Chaikin Analytics, and it will show you what's going, who the winners are, who the losers are, which power gauges have turned in the last week, and it even maps your stocks on a heat grid so you can easily see the winners and the losers. And if you have losers, it'll recommend swaps so that you get out of the losers and into X. We pride ourselves on our customer service. We don't just send you on the system and say good luck. We, as I say, we have these tutorials that we schedule with you and walk you through the system to make sure that you really understand it. We get a lot of compliments about our team of professionals. It's particularly well worded by this subscriber. Your after-sales service has been exceptional. It's like having my own team of professionals behind me wanting to succeed. And this is kind of a fun testimonial because it's from a 17-year-old. So you're never too young to start investing in stocks. This is a Rachel Fox. She's an actress. She lives in L.A. She's been using our system. She appears on Fast Money quite frequently. And she's a big believer of the Chaikin Power Gauge rating, and she actually will be co-hosting a webinar later this month with our son Eric. And here's our happy couple we started out with. I referenced the Amazon trade that was made just a short 6 weeks ago. This gentleman on one of Mark's webinars says, I followed your Amazon trade. Great trade. Profit covered next year's total cost of our 2 months in Hawaii after taxes. My wife thanks you, and I thank you. So, Mark and Dan, thanks so much for hopping in when my computer went kaflooey. And, Mark, thank you for answering questions along the way. And Dan, if you have some more questions that people want to ask, I'm happy to stay on.
Sure, Sandy. We're getting several people asking about using for options. Do you or Mark perhaps want to speak on that?
That's a great question for Mark to answer. Can you take care of that one?
I'm happy to. And just to give you a little background, I ran an options department for a major brokerage firm for 5 years, and I'm a strong believer that to trade options profitably, you need an edge. And for me, the edge used to be technical analysis. Now it's a combination of the technical analysis that Sandy's been talking about and the Chaikin Power Gauge rating. In order to trade options profitably, when you're trading against the John Najarians of the world, the big institutions, you need an edge. If you have an edge that helps you know where the stock is likely to go, your options trading is going to be a lot more profitable. So although options trading can be very simple, just buying a put or a call, it can be also complex, sometimes too complex. The bottom line is if you use the power gauge and the technical indicators, so that you're only trading on the long side with calls in stocks with a bullish power gauge rating and strong technicals, and you're buying put options on the LinkedIns or the Splunks or the Lululemons of the world or the Coaches, which are making new lows, where there have been many, many sell signals. Every time there's a sell signal on a stock like LinkedIn or Coach or Splunk, that's a great opportunity to buy a put option. Now, obviously, they don't all work out. That's the beauty of options. You know what the limit of your risk is going into the trade, and if you're sensible about the option you pick, Chaikin Analytics can improve your options results dramatically, and that's part of the reason that we do joint webinars with Option Monster, John Najarian's firm. John is using our system, as is his brother Pete, and they swear by it. It's obviously not the only thing they use. They've developed their own tools. So long-winded answer, Chaikin Analytics is fabulous for options trading.
Great. And Sandy, how many stocks do you typically hold at one time?
I typically have anywhere from 5 to 10, 10 being the most, which is rare. After that, it's becomes harder to manage, but with anywhere from 5 to 8, I can manage those. I can keep track on that. And remember, I only want to spend 10 or 15 minutes a day on this, so that works very well for me to keep track of 5 to 8 stocks.
Right. And do you put stop losses on any of those?
My stop losses really are the indicators. I do not, because what I've done is look at the indicators. I look at the indicators every day, and when a power gauge goes from, say, bullish to neutral and relative strength turns red and the money flow starts coming out, I mean, that would be my equivalent of a sell or a stop loss. So I rely on the indicators more than a dollar amount.
Right. That makes sense, right? Of course. Okay, that about wraps it up. Would you like to do some closing comments, Sandy?
Just happy to have you all attending. Thanks so much. And thanks to Mark and Dan for hopping in during the little technical glitch.
Sure, I'm glad you made it back.
Thank you.
All right. Okay, so thanks a lot again. And I just want to let everybody know that any questions not answered will be addressed via email. And the webinar was recorded, and it will be sent out to everybody who registered. So thank you again for attending From Novice to Knowledgeable. Invest Smarter in 5 Simple Steps. And have a great evening. Take care.